Good weekend. Ira Epstein, and here we are with your weekend edition of your SPDR ETF stock market wrap-up. And this is for Saturday, July 8th, 2023. Now, first announcement. I will not be putting out anything in the way of updates in the morning. I'm going to try my best, but I have a family member that's having a major operation. I've got family coming in from all over the country. It's a big operation. Elderly person, we got our fingers crossed. It looks good, but you never know. So we all have to be there. And I think you get that. That's what you do. And I have to leave like 3:30 in the morning and drive into Indiana where I have to go, and then everybody will be there early. If I can break free, which I think I will, and that's what I'm hoping to do, eventually we'll end up in a waiting room, and I'll bring my computer, and if I can find quiet and so on, I'll try to do an update or two. Okay, is that fair enough? If I can't, you know what I'm doing. If things go well, and that's what we got our fingers crossed on, I'll be back doing everything on Tuesday. If they don't go well, I don't know what my agenda will be. All right, is that fair enough? You've all been in that situation, I'm sure, at some point. So here we go with the week where we get the jobs report. We get a scare because ADP number went up to 497,000 jobs. What the heck was that about? Double the estimates, but that's one of the biggest numbers ADP's put out. And everybody's going, well, you know, the tradition recently has been that the jobs report beats that. Are we going back to 500,000 jobs? It didn't turn out. It turns out there's some discrepancy between the two. You came in at 209,000, and then they even reduced the May number back down by 30-some-odd thousand to 309. All right. So we're going in the right direction. What's going in the wrong direction is wage inflation is still climbing. It's not jumping, but it is still climbing. So what do I think that combination does? I think there's no doubt in my mind the Fed's now going a quarter point on July 25th and 26th. The 26th is the meeting date. Why? The nail in the coffin. You got things on the run, now you nail it. You had your chance. You're an artist, you painted a picture, let me stand back and look at it, which is basically what the Fed did. And now by looking at it, how can you get away from saying wage inflation is still there? I got to stop that. I have one tool, it's raising interest rates. CPI comes out a little bit later. And as CPI, the estimates are already out. They're looking for a headline down at 3%. That's a wonderful number. Remember, we were at 9%. We've taken that down. Unfortunately, the sticky part, and I have been a broken record on that, while I expect it to decline, it's declining about 2 to 3 tenths a month. At that rate, we'll all be off the planet Earth by the time it gets to the 2% the Fed wants. Got the point I'm saying? And the estimate is for 5%. Fed sees those estimates. It can see what's going on. So I think the quarter point hike is what you're going to get. And after that, the neat part is there's no meeting until September. So that's where I'm looking at that and how it's all going to fit in. Obviously, one of the stocks that has run away this week has been Rivian. And I'm so happy I did special reports. I pointed out to you that I think that's going to work. And I think Lucid will be the other one that surprises you because they have the money with the Saudis behind them to build the plant, produce more cars. They'll get the technology finally working, and away they go. Rivian's delivering, I think, its first 300 Amazon's trucks in Germany, of all places. And as I told you, they're now delivering more and more of the regular trucks on top of those Amazon delivery trucks. Good news for them. And another startup that looks as though it's got, because of big backers, the promise of making it. Lucid is a different story. It's a high-end vehicle. It's not meant for the everyday guy out there. It's expensive as can be, and it's meant at the high end with lots of luxury in it. I had the pleasure of being in one. I didn't drive in one, but I sat in it. I loved it. Now, my friend got delivery yesterday of his Cadillac. Is it the Lyric? Finally. So it came in. I have not been in it. I'm praying he calls me and we go for a ride tomorrow. And I'll get to see how that thing sums up and looks myself. I have not been in one of those, but I love these electric cars. Do I own one? No. I live in the city. I don't need a new car. Where am I going? I don't drive 1,500 miles a year. It doesn't make sense. And I got better things to do with dollars. Amazon, guess what July 11th is? I think it's 11th and 12th or 12th and 13th. It's right here. 2 days of Amazon Prime. So the market has gone up in front of it. We have to pay attention to that. And that's what I think this has gone up on in large part. Not only AI, because they'll be big employers, but that's a big part of it. You're into major resistance. This is not the spot I would run out and say, go out and buy it. It's Prime Day coming at you. No. This is buy the rumor, and now you're into all the resistance. You got the Bollinger Band. You have the 100-day average to 2. That's not to say down the road it can't go higher, but it's just come here from roughly the 90 level, and you're pushing right now 131. I'll let you buy more of that. I wouldn't do it up there. You have an embedded reading, which means on a good break, I'm interested. But that's going to be a sizable break. If you're taking my enhanced Bollinger Band course, there's a key moving average you go at when you have the embedded reading. If not, you want to click up here. That'll take you there. Or at the end of this, I'm going to be talking about that to you because it's 15 chapters. You'll knock it off on it one day easily, and you'll get it. And it's boom. It's all video taught to you. I give you the charting software. And then whether you're a subscriber to mine or not, I'm going to give you my research for a 2-week period so you get to see just how I talk about it each and every day, because you always have one of these doing that. It's very, very cool, and I think something that will change your methodology because these bands have so much meaning on charts. Now, a market I'd stay away from is Schwab. Look at how the Bollinger Bands are narrowing in. It means volatility is coming out of the market. The problem for Schwab and the problem for KBE, KRE, all of these is one thing. As the Fed keeps raising rates, it puts pressure on regional banks, it puts pressure on a Schwab to keep deposits. The money's going to move. It's hot money. Pay me what I want, which will hurt Schwab, or I pull my money. I put it in something that you don't earn the interest on. You've come up to the resistance in KRE. This has been a bear market bounce. It's now going to tell us what to do. I think that if you get back under right here, these lows, and that's going to be around the 39.39 level, the market gets into trouble. The good news, and there is good news, the Bollinger Bands are moving quickly to narrow in. I don't know that there's a lot of downside left in it. Same thing goes for KBE. If you take out 34.66, where are you going to go? You know, that number is going to jump if you follow me right here. 32.62, 30.31, and the week before was 29.12. So even if it's only $1 at a time, if you get under 34.66, I'm not looking for much more than 33.66. That's the point that I'm making here, and I'd pay close attention to that. In KLE, the industrial sector, way better than I thought. Maybe this is because the market thinks interest rates are going to end. Nothing in factories in any manner looks bullish when you look at government reports. But when you look at the charts, it's had a heck of a run, but it's overbought. It's at a Bollinger Band. It's ripe for a correction. In the energy sector, will the market be able to clear 82.52? If it does, I think it enters bullish territory. I wouldn't want to see it back under this low all the way here, and I think you open the door for wherever the Bollinger Band top is. In the foreign currencies, if you can take out 2 weeks ago's high, right here, and specifically we'll show that number is 101.50. I think the market might surprise and get very quickly up to the upper Bollinger Band, if not higher. I am looking for the dollar to put in a major top here. And that's going to be, I think, very important. In the gold market, that could support gold. I mean, one of the headwinds has been the strong dollar. You're taking that away. It's still going to be relatively high interest rates, but if they drop back, then gold goes up on the fact that, well, we still have relatively high inflation, and it might go with that. I've told traders that are my subscribers that I don't want to be short the miners any longer. In Tesla, here you are, up in a stratosphere. You either embed, which means another leg up, or this is about where the market starts having trouble. I wouldn't be surprised if you fall back to the 100-day average and fight a battle against that. AMC, it's a do or die time. It has 2 movies right now coming out to help it. First, it's had Harrison Ford's Indiana Jones. Price-wise, this didn't do any good for it. Well, the Barbie, And will the new Mission Impossible do the job? I think the blockbuster will obviously be the Mission Impossible, but that's me. I just think anything Tom Hanks does blows your mind. And all the reviews, Rotten Tomatoes, the highest for a Tom Cruise movie ever, for the people that have already seen the pre-screening. So that says a lot. Will it help the stock is the big question. The stock on its own is bearish, but oversold. Apple. So Apple's now getting ready, and you know what's going on these on this thing. The market's starting to talk about Apple 15 and all the enhancements it will and won't have, and price increases. It's talking $200 a unit more. So you're getting up there pretty big. I mean, a phone's going to run you $1,400, $1,500. I hope you buy insurance if you have one. I wouldn't own one now without it. Embedded reading. If you drop down, I still think it's a buy. I don't see a change on it. Last Google. Well, it's come up. It lost its embedded reading. It's made its first run to the closest moving average. I teach that in the enhanced course. What happens when that occurs? You've hit your target. The secondary target might be the 18-day average of closes. So if you haven't learned this, you want to learn how I look at the combination of slow stochastics and the Bollinger Band, and I tie them together. In order to do that, just watch this. You can click up here. It'll take you to where you have to be on our website. I'm Ira Epstein. I'll see you Tuesday at the latest. Fingers crossed. Take care. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.